The stock market. It looks like this. Screaming people. Green lines, red lines, numbers flying everywhere. But strip all that away, and it's actually simple. Let's break it down. Meet Bob. Bob owns a pizza shop. Business is good. Bob wants to open 10 more. But he needs money. A lot of it. He could go to a bank and borrow it. Or he could sell tiny pieces of his company. Those tiny pieces are called shares. Buy a share, and you own a slice of Bob's pizza empire. You're not lending money. You're an owner now. When a company sells shares to the public for the first time, that's called going public. Now anyone can buy a piece. Bob gets his money to grow. You get a share of the profits. So, how do you make money? 2 ways. 1. The company grows and your share becomes worth more. You bought at $5. Now it's $50. Sell and you pocket the difference. 2. Dividends. Some companies pay you just for holding. A little cash, every few months, for owning a slice. But here's where it gets weird. Prices never sit still. One day a share is 40, the next day 32. Why? Because a stock is only worth what someone will pay for it. Good news, everyone wants in. The price goes up. Bad news, everyone runs for the door. The price drops. It's a giant auction. Millions of people, all day, every day. And people are emotional. They panic. They get greedy. When prices rise and everyone's optimistic, that's a bull market. When they fall and everyone's scared, that's a bear market. Same companies, same pizza, just different moods. Zoom in on one day, and it looks like chaos. Up, down, total madness. But zoom out over decades, and the whole market tends to climb, because good companies keep growing, and the economy keeps expanding. The short term is a mood swing. The long term is a staircase. But picking the one winning company is hard. Even the pros get it wrong. So, there's a shortcut. Instead of betting on one company, you buy a tiny piece of all of them. That's an index fund. One purchase, hundreds of companies, the whole market at once. If a few fail, but most grow, you still win. So is the stock market just gambling? If you buy random stuff hoping to get rich by Friday, then yeah, kind of. But if you buy good companies and wait years, that's investing. The difference isn't the market, it's your patience. The stock market isn't a casino, it's just millions of people, buying pieces of the future. Some days it panics, some days it celebrates. The only question is, are you here to gamble or to own?